Hey everybody, Boris with Forex. Welcome to the commodity dollar update for Aussie dollar, dollar CAD, Kiwi dollar for November 19th to 23rd of 2017. And I think the most interesting thing this week was the absolute relative weakness of the COM dollars. As a matter of fact, ironically enough, while the dollar was suffering against the majors, it really actually picked up steam, and the COM dollars themselves were very, very weak against the buck, especially the Kiwi, which broke very key 68 support, although I'm not ready to call it a collapse just yet. I'll take a look at the charts and I'll show you why. But both Aussie and Kiwi continued to compress to the downside, which is really interesting, even despite the fact that U.S. yields really didn't move that much, and the carry actually still stayed in place. I guess the market is really starting to discount the possibility of any additional hikes out of the condor land, and perhaps maybe the market is getting more and more nervous about the slowdown in China as we go forward. The one exception to this rule was actually CAD, which of course traded off oil, and oil getting bid up at the end of the week really helped keep CAD not as weak as the rest of the COM dollars. And I think in many ways the next week could be this arbitrage play between the strength of oil and the rest of the COM dollars. If we get oil coming up towards the highs of 58, perhaps even closing on 60, certainly the CAD crosses, and especially the CAD crosses on the COM dollar side, going to be very popular to the upside. So looking at the support resistance levels, things move down. Aussie now is very much 75 support. Kiwi now really took out that 68 and very much teetering on the edge of whether it's broken the big double bottom. We'll take a look at that in just 1 second. And CAD is still staying 26, 29. But obviously, if oil starts to escalate to the upside, we could get a move here towards the 26 level in a contra directional move versus the Aussie and the Kiwi. On the calendar, not much on the calendar. We had retail sales in New Zealand. I think we had a little bit of RBA speak, but none of it really matters, and trade balance. I mean, just nothing. There's nothing on the calendar. It really is not a big event week as far as economic data goes. It's all going to be kind of technical trading. Let's take a look at the Kiwi first, because I think Kiwi to me is the most interesting story here this week. I mean, look at this. This was a chart last week. Can Kiwi hold this double bottom? And you could say it really didn't, right? But I really don't think it just. Remember that to me, double bottoms are not very. They're not perfect. What I mean by that is the markets will sometimes break them, but only if they break them with conviction can you say the bottom has been broken. Because typically they love to test the double bottom. The most interesting thing that's going to happen is this week. This week, what's going to happen here? Are we going to be able to consolidate, come back up towards the 69s? Or do we press further? This move towards 68 is really key. We broke below it, came back above. Now, obviously, 68 needs to hold a little bit. If we can hold above 67.50 for a day or two, there may be a chance here that this double bottom really holds, and we could trade weekly. Weekly by mean WEAKAY, not on a weekly basis, but just in a weak manner towards the 69 handle on a little bit of a short covering basis. But if we start to squeeze it below 67.50, the fat lady has sung. Just ring the bell. This thing is over. We're now moving towards the 66 level as the full distribution in Kiwi comes full force. Aussie not as distinct, but also very negative chart. I mean, basically, it's a massive distribution chart in both of the high yielded COM dollars. We are coming up against a very, very key support of 75, and I certainly think there's reasonable chance here to make bid at 75. If for nothing else, then just even a dead cat bounce to 76 should be decent. There's nothing on the calendar both ways that suggests, unless we get a runaway move towards the 250, which is very unlikely on government bonds. As a matter of fact, let's take a look at the bonds, because we looked at that. The yields were better. Certainly U.S. yields are still looking healthy, but we have been able to not really break above this 240 level. Certainly not been able to challenge the 250. So in many ways, I think the answer to COM dollar trade will be here. If we start to distribute back down towards the 230, these guys get a second chance at life. If we start to squeeze up above 240, these guys are dead as interest rate differentials really start to press on them. And Kiwi really does break the 67.50. So I'll be watching those two key levels this week as my key levels. And of course, the third story in the COM dollar land, the CAD. I'm just zooming in because I want you guys to see it. This is the key thing here. So we took out the 28s on a big run here off of relatively placid CPI data. Nothing in the Canadian economy, by the way, really suggests that the BOC is going to raise rates anytime soon. But at the same time, it's not nearly as bad as everybody thinks, simply because the economy is doing quite well. Yes, inflation is tepid, but this is providing a little bit of a tailwind to the economy, because if we can start moving ourselves towards the 58, and more importantly, if oil breaks out towards the 60 handle, that's just by itself monstrous positive CAD. There's no correlation basis, and we could certainly, drift right back down to 26. All of which, of course, brings up the possible relative strength story of CAD next week, and that's what we're going to look at in the crosses in the next video. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.